This Twin Peaks Investing podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.
Hello and welcome to the Twin Peaks Investing podcast. My name is Peter Higgins. You can find me at Conkers3 on Twitter, X, the platform X. And here I am on the 10th of June. Yes, we're in June, folks. The sun's been out. The markets have been very kind. And I'm here with my fantastic co-host, Henry Viola here. You can find him at HT Viola on the platform that is X. Henry, how are you doing?
Oh, I'm very well, thank you, Peter. Very well. Glad to be here.
Good to have you back with us, sir. And I'm glad that your vacation didn't lead to you just not returning back to Londinium, and you went back to work as you should have done last week, and you're gracing us with your presence. We're actually recording this, ladies and gents, on a Tuesday because tomorrow evening I'm out at a charity fundraising award event tomorrow night on Wednesday night in Leicestershire. So we're a day early, and depending on how many different bits and pieces of moving parts I've got to do between now and Friday, it might go out Thursday night, it might go out Friday. I don't know. I've got so much to do regarding the Investor Summit, which I'll talk to you about later and tell you about some new people that are on the show. Henry, what's been grabbing your attention, mate, regarding the markets? Is there anything particular you want to get off your chest first before we start the pod?
Well, the big thing I've noticed is just how hard the market is rallying. I mean, this has been the best start to a year I've had for years. And I don't want to jinx anything, but shares are up. The market seems fairly kind. And considering all the volatility we've got in the world, that's quite nice, to be honest. There's a lot of positions doing fairly well in my portfolio. And I think there's a sense, I don't want to say complacency, but there's certainly a sense that things are ticking along nicely, despite all the chaos in the world. I mean, only in the last 48 hours or so, we've seen scenes from America in, I think it's Los Angeles, with protests about the immigration force. I think a journalist's actually been shot with a rubber bullet, ended up in hospital. It's not good. It's really not good. You've had the fallout with MUSK and Trump, and then what seems like some sort of a reconciliation today after some fairly scandalous slanging matches on both sides. It's been quite shocking, to be honest, to watch both the president and the founder of one of the world's largest companies, founder and CEO, going at each other the way that they have. I don't think anybody would have necessarily seen that coming 3 months ago. So a lot to digest for the markets, to say that they've been quite smooth up and to the right.
Yeah, to go back to one of the points there you made about the Musk and Trump bromance, I've got a slightly nuanced view about that, and I've seen these sort of things happen before. And Musk and Trump are individuals that never play nicely with other alpha males. So it was coming. But I think this is more theatre, if I'm honest with you. I think this is about them showcasing, look, we're not getting on anymore. Look, he's going to go back to Tesla now. And he's not going to be part of my government. And he's not going to be doing anything regarding Doge going forward. And if you notice, this is another part of the theatre. Actually, what's happened to the Tesla share price, that is actually rising and has been rising for the past few days. And prior to that had been having a little bit of a lull, and now it's going back up. Why? Because it's like, I'm distancing myself away from government now. I'm going to be focusing on Tesla. Share price goes up. Every time it goes up, another billion, another billion, another billion, another billion added to his wealth. Whilst he was in the government, while he still is, until he officially says he's no longer. But I think it was, what was it, October, November time? How much did it go up? 50%, 60% in that short space of time?
Skyrocketed in a week.
Skyrocketed whilst he was part of leading the government and doing all manner of different things. And then it started to wane and drop off. And now it's going back up again. So, yeah, we'll see. And I was going to mention that a bit later on regarding another stock, which we'll talk about a bit later on. But we had the FTSE 100 at the all-time high on the 3rd of March, 8871.
Is that
FTSE
an
went
all-time high?
All-time high, 3rd of March.
Nice.
Okay. FTSE 100 then went sub 7,700 on the 9th of April, when the markets and institutions panicked about the orange event and the tariffs and trade wars. And then today, the FTSE, what did it do, Henry? It's at all-time high, intraday new high of 8,886, surpassing the previous 8871. It closed at 8853. Yeah, so tariff noise and what's happened since April. I've spoken about it a couple of times. Stocks that people were selling off and panicking about have all bounced back 25, 30%. We spoke about it at the Master Investor Show. One of the stocks we spoke about, Alan Patterson, we gave him a shout out at the live event at Master Investor Show. Rolls-Royce got a big boost again, and we spoke about the SMRs, didn't we? The small modular reactors, and it looks like they've got. Let me just get my notes correct here. What's it going to be called, Henry? Let me get my notes right. Where are we? Yeah, there we go. Yeah. So basically, today they were selected as the preferred bidder to deliver the UK's first ever small modular reactor. That's a big deal.
Oh,
yeah?
I think I saw something about this.
Yeah. But who else can? They've been selected, but who else can deliver it in the UK?
Yeah.
So they're going to get the deal. So the share price hit a record all-time high, rights adjusted SP share price today. So it just keeps climbing, mate. Keeps climbing.
Yeah.
And even since we did the pod live at Master Investor Show at the end of March, it's up 17-18% since then.
Yeah. I can believe it. I can believe it. So, I mean, there's been some huge market moves, and it's really interesting, the dichotomy between the AIM market, our small caps, which are dying on the vine. The city brokers are running around screaming it's the death of the UK market. You've got people on Twitter constantly going on about, there's going to be no market in a year. It's a disaster. Rachel Reeves has killed the stock market. And then on the flip side, you've got the FTSE 100 galloping away like a herd of gazelle. These big blue chip multinationals are doing fine. And I read a really interesting comment from someone this morning that was saying, if the government wants to encourage growth in the smaller shares, maybe they should look at the rubbish that we've got listed on AIM, because there are so many loss-making, ungoverned, I won't use the word I want to use, but terrible businesses that take investors' money, pay the directors a huge salary, and just incinerate capital. And that's why people aren't going near AIM, to be honest with you. As a market, it's not doing its job.
Yeah, and I think it was this week, Henry, or last. I think it was this week, maybe last week. Get me the dates right, because everything seems to be a bit blur for me at the minute. Celebrated their 30th year anniversary, did they not? AIM were 30.
They did, yeah. It was launched in the 90s. Yeah, you're right.
Yeah. So 30 years. They've developed and nurtured some fantastic companies who have moved on to the FTSE and have been taken over by, private equity and overseas companies, etc., and that will persist. But at the rate, as you correctly pointed out, at the rate that they are losing companies that are delisting because of failure and management greed and dilutions and etc., they'll be struggling. They will be struggling. So they need to have some new companies listing, IPOing. They need to nurture the ones that are there, and they need to have a cull of certain ones that have failed for 5, 10, 15 years and go, you know what? The reasons why you listed with this, you failed on that merit. So, we need to push you aside and get some healthy companies in here.
Yeah.
But I'm not sure that the government or whomever has that sort of will to do that. So those laggards and those, what's the term that the city uses? Zombies.
Yeah.
Are going to still be like.
Yeah. Yeah, you're
hanging
absolutely
around
right.
the market.
I mean, you look at, I think there was Wise, the payments business, that's just
Yeah, the other one.
delisted, and there's loads of people crying in the press, oh gosh, we've lost another tech giant. It's a disaster. They're going off to the NASDAQ in
Yeah,
America.
it's going to have the
How could
primary
this
listing in the
possibly
US.
happen?
Yeah.
But if you look at the share price, bear in mind this thing pays no dividends. It's been listed for, I'm going to take a stab at 4 years. I'm pretty sure the current market price is actually below where it listed 4 years ago. So as an investor, what the heck was the point of owning this thing?
Yeah. I'm not sure that is the case regarding the IPO price and the takeout price, but it's
I
done
don't
well,
think it's.
Henry.
I don't think it's. I honestly, I don't think it has. When you look at how long
Right.
it's been
Okay.
listed for, now, there is also a question there, because most people I talk to about Wise tell me it's the most incredible business. It's the next Amazon of the payment system. I'm an idiot for not owning it, and people don't understand it.
Yeah.
And yet, I'm not entirely convinced that it is, because you've got other businesses that you have got other businesses on the UK market that have grown twofold, threefold, fourfold, fivefold, that are multi-million pound, multi-hundred million pound, if not billion pound businesses that people are investing in, and the share prices are going up. You just mentioned Rolls-Royce. That's a profitable business that's doing well, and the market's rewarding it.
Rewarded it. Yeah.
And it always reminds me a bit of that guy, what's his name? Matt Moulding from the Hook Group.
Yes, THG. Yeah.
And he writes these long diatribes on LinkedIn. They're very well written, by the way, but how it's unfair. The press is out to get him. The market's out to get him. Investors don't understand the Hook Group. He's lost 90% of his wealth because he listed on the stock exchange and he'd be a multi-billionaire, but he's only worth 100 million or something. And then you look at the figures for the Hook Group. Yeah, I'm sorry, mate. Like, there's a reason no one wants to buy that. And
I've previously owned that company. I've traded it heavily. I've got my eye on that regarding some of the parts, Henry. I think somebody he's a sort of alpha male as well that doesn't want to share. He wants to own all of that himself, a bit like Mr. Fraser at what's it now called? Fraser Group. Ashley at Fraser Group, sorry. So they don't play well with other alpha males. So it's going to be one of them where he's going to have to break the group up himself, I think, to get the value out. Or he will actually do what he said he's going to do, or has said he's going to do previously, and list or have a primary listing for THG in the US and get the valuation that he thinks he deserves. And you know what? He may not get it. You know what I mean?
don't think he will.
May not get it
I
because
don't think he will.
The revenue simply isn't there yet for THG.
You look at Martin Sorrell said the same thing about S4 Capital 2 years ago. He threw his toys out the pram. No one understands S4 Capital. I'm going to go to the US. Well, it's 2 years later. He's still not in the US, and the share price is down 90%. I'm sorry, Martin, but this just screams of sour grapes.
Yeah.
Come and prove me wrong, but what do I know?
Going back to Wise Group, you're absolutely spot on. I've just quickly pulled up a chart here. Market cap's 11 billion right now, and all time, right, from IPO to now. So the IPO was in 2021. To now, the shares are up 12%.
12%. So what's that? 3% a year?
3%.
You'd have done better putting it in a bank account.
Yeah. So inflation would have eaten that to zero, mate, over the past 4 years. Yeah. So you're spot on. Over the past year or so, it's up 4%. Sorry, let's just get that to 1 year. Sorry, 1 year, it's up 29% since it talked about going overseas. But it was down at, where was it? Let's have a look. 5 year. We're looking at sub £5 during early mid 2022, Henry. So it's halved at one point, and it's come back now. It's nearer to it's £10.82, but it's not done well as an IPO. But they think they're going to. Some people are saying once they have their primary listing or list fully in the US, it'll be worth twice as much. So it'll become a £22 billion company. We will see. And like others are saying to you, Henry, about it, about it being the Amazon and this, that, and the other, that they may have started there, but the actual value of the company is going to be all the different avenues that they split and diversify into? Who knows?
And maybe maybe come back in 10 years' time, and this thing is the Amazon of the payments world, and I'll be sitting here going, "Well, geez, I could have retired a billionaire by now." But
yeah, we will.
To me, it just screams of sour grapes. It's the same business whether it's listed here or whether it's listed in the US. The Americans can come over here and buy it. The Americans have come over here and bought it, but
yeah.
Well, actually, that's not true. No, it's just changing the listing. They haven't bought it. It's not being acquired. So no, I'm going to finish that sentence. They didn't have the right
criteria to be listed fully as a FTSE 100 company. Yeah, as to some parameters that they didn't make. Yeah. So therefore, it wasn't listed as a FTSE 100 company, but it would have been given its size, but it wasn't. Yeah. So now they go over there. It still has a 11 billion market cap. What be? So let's put that at 12-13 billion dollars market cap over there. It's still going to be a tiddler.
Yeah.
Over there.
Yeah.
When you've got the likes of Apple and others at 3 trillion.
3 trillion. Yeah.
Yeah. So interesting times ahead. Right, Henry, where do you want to start with this? We've had a little talk around the markets. And congratulations to all of those that have got their portfolios back into positive territory, and those that are singing and dancing plus 5%, plus 10% year to date. We're nearly halfway into the year, and those that were saying selling may and go away. Unfortunately, you've gone away and left your portfolio neglected with cash, too much cash, and your portfolio could have done better if you kept on to the portfolio. Where do you want to go, fella?
Well, the other thing I wanted to raise, because we're doing this a day early, this is slightly premature, but tomorrow is the day of the spending review. And I'd completely missed this one until Monday morning, and I opened up the FT and went, oh, it is actually Wednesday. There's actually a spending review. It's not just Rachel Reeves saying we've got no money again. Maybe it is, but so, what's going to happen tomorrow, as far as I'm aware, Rachel Reeves is going to stand up at the dispatch box, and she's going to tell us how much money we've got to spend department by department. So she'll go to the prison service and say we've got no money for prisons, and we'll go to the NHS and we've got no money for hospitals, and we'll go to the schools and we'll say we've got no money for schools, and we'll go to defence and we'll say, yeah, we can go and blow up the Russians, whatever it is she's come up with. And I just wanted to talk through the implications of this as I see it, because although by the time this comes out on Friday, actually I think there are some interesting angles to it. Now, there's been all the typical stuff sort of leaked in the press beforehand. We know the government's big on infrastructure commitments. They keep talking about infrastructure. They keep talking about the NHS funding. They want to drive reform in education. But to me, the opportunity is not really about these big headlines. It's actually about the quiet allocations that the government's going to make, and they're going to be announced tomorrow. There will be a document released on the government website, which is the spending review, which you can go and you can download, and you can read 100 pages of detail about this. Where is the money going to go? And this is what's going to actually send ripples through the market for the next 12, 18, 24 months, as that money comes out from the Treasury and goes into the real economy. And, in every review, the government reveals its priorities. It's not just about flashy headlines. It's about what they actually do with the money. And where the Treasury spends money, you often find the private sector follows. So I just wanted to talk through some of the ideas I'd had about that, really. The first one that really struck me, and this again comes from the world of insurance a little bit, but you've seen recently there's been this thing with M&S having a cyber attack.
Yeah.
M&S have a cyber attack. It knocks all the shops offline. It's a disaster. The payment system goes down. The inventory system goes down. They've been crippled for weeks. I've heard anecdotally that the damage has been so great that they've actually spent all of the money that their insurer was willing to spend on trying to fix this cybersecurity problem, and now they're having to spend their own cash. Now that's anecdotal. I can't validate that for you, but that shows you how severe this damage can be. There are other businesses that have been attacked. I heard about, I think it was Adidas, there was Nike, I think Harrods. Some of these businesses, when the insurance manager went to go and buy the insurance, the board went, nah, it costs too much money to buy that cyber insurance. Don't worry about it. Then they've been attacked and it's been, oh yeah, well, you didn't have insurance. That's £100 million bill you've now landed yourselves with. Now, the reason I'm mentioning this is because there's been a noticeable impact in the insurance market with not just companies, but institutions of all types. And I include the government in this to some extent, suddenly scrambling and going, Jesus, are we covered for cyber attacks? What are we covered for? What happens? How much insurance have we got? What happens if we need to file a claim? And you've got firms listed on the stock exchange, Kainos Group, Softcat, Bytes Technology, that have got active contracts with the government to help advise on things like IT, public sector IT and cybersecurity, who I suspect are going to do quite well out of this spending review, because there's an increasing number of these cyber attacks coming. And the narrative there is simple. The government's got to digitize or it's going to continue to decline. And businesses like these four, Kainos, Softcat, they're going to be at the forefront of helping the government to do this, because the government's cutting back on in-house capability and they're spending more and more on these consultancies.
Agreed.
This is a quick hello to you, our valued Twin Peaks Investing podcast listener. Whatever channel you're listening to, please make sure to subscribe and you'll always be the first to get the new episodes. Thank you for your continued support.
You've got one of the other, we talked about defence and aerospace on the recent Master Investor. We talked about the BAE, company BAE. I think we talked about Kinetic. We talked about Chemring. Defence is going to be a sector I can see doing well out of this spending review. I think we are going to be spending more money on defence, and I think most people are looking at that, and a lot of that is priced in. But another area that I think is going to do quite well tomorrow that I'm not hearing a lot about is actually the healthcare technology and diagnostics. So it's more specific than government IT and cybersecurity across the whole estate. It's actually the NHS. You've got this backlog. You keep hearing about this backlog of patients. There's millions of people on a waiting list for hip replacements, for back replacements. You can't get a GP appointment. You can't get cataract surgery. You can't get your ears syringed, all sorts of stuff. And health spending is going up and up and up and up and up. And the government can't afford it to keep going up at the rate it's going, but we've got more people that are more ill that need more care. And I think what the government's going to try and do is increase healthcare technology spending. You've got companies like, there's Omega Diagnostics, there's EMIS, there's, what's that other one? Sounds like a bird. Craneware, that's it.
Yes.
Craneware.
Yeah.
And these are all businesses that provide technology to the healthcare sector to help digitize patient records. Link up your GP with your consultant. Link up your consultant with the A&E department. Link up the A&E department with your dental records. Link all this up with the NHS app on your phone to improve the quality of the healthcare, improve the access to healthcare, but also speed up the access to information doctors have about them. I was in the GP the other day, 8 o'clock at night, and the GP says to me, I know this sounds crazy, but I can't see your medical records. Then what do you mean you can't see my medical records? You're the GP. Says, oh yeah, but I'm the out of hours GP, Henry. I'm not your GP. That's a different system. I'm like, what, are we living in 1980 or something? What? He said, could you tell me?
Name, date of birth, bang, on the computer. It should be everything just there in front of you.
He said, I can see the last time you came into this out of hours clinic, but I can't see your medical record. Oh, flipping heck,
so there's
mate.
No joined up computer systems there for out of hours. You're
Exactly.
going back to a board and chalk.
Exactly.
Yeah.
So I can see the government really investing in this, because when I heard that, I'm like, well, there's an easy win right there. Give the out of hours doctor access to my GP's records.
I'll go back to the cyber thing in a minute, Henry. The thing that I have a concern about, and having worked in the public sector, is that you've got a disparity and disparities regarding local authority, central government, councils. And they're all the previously were all using very different systems.
Yep.
And there's not one system which or systems they've put together so everyone's talking to each other.
Yep.
You know, so that you should be able to be like you were on holiday the other week in that place. You should be able to go if you have an emergency and they go bang, 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 data, and it just comes up like DVLA. And
Yep.
that's what they've been working on for like 15 years, 25
Exactly.
years to do that. So you get, you know, your number plate gets recognized, bang, that car belongs to Henry Viola Hare, that car belongs to Peter Higgins, no matter where you are in the country.
Yeah.
So why have they not sorted that out to the extent where it's so efficient for the same way with the NHS? It's like a lumbering, slow dinosaur that needs to be absolutely put onto the NHS, you know, operating table and go, right, let's sort this system out once and for all for everybody. So it's joined up thinking, you know, and it's spliced together with information from healthcare, NHS, education, employment. Everyone's there. All the information's there for the same person. You know, for everybody. So it's nuts. Right, going back to your cyber thing that you mentioned, Henry. I agree with you that needs to be sorted out. I think it's an area that is definitely going to see a lot more action and has been a situation where a lot of the companies that we've got in the UK have been taken over in that space. We've talked about them before, going back in the day to like SafeCharge and others. More recently, the one that you had, Darktrace, as well, has gone. That's meant to be like the UK unicorn for cybersecurity. What happens with it? Been around for a little while, had a few difficulties. Bosh, taken over again, and not by a UK entity, by an overseas entity. Gone. So we've got very little in that space, which is of scale regarding a large behemoth cybersecurity company. I've edged my bets in the cybersecurity space. And the company that I've got now is called Gen Digital, right? And Gen Digital own a few brands. We've just pulled up here because I can't remember all the names. But these are names. Tell me if you just say, I don't know this one, if you don't know it, right? And you should know all of them. But the brand Norton.
Yep, know them.
You know that one. Havas.
Yep, I know them.
LifeLock.
I know them.
AVG.
I know them. They own all of these. I thought these were independent companies.
No, mate, they've been going having little nibbles here, nibbles there, and buying
Dude,
those
that is
companies.
A hidden gem. What's the ticker on that?
GEN.
GEN.
It changed its name to Gen Digital to encompass all the different brands. But that's what I'm holding there for that, Henry, for that cyberspace thing.
Oh, nice.
You mentioned the insurance side of it.
Yeah.
I've had Beazley for X amount of years.
Yeah.
And I have to go to Beazley and go, we'd like to buy some cyber insurance, please. Yeah. There's a few other companies in that space, but mine's Beazley, so I've helped them. They've been compounding. They're near record highs at the moment. I'm happy with that. Compounding 15, 20% per year. And like you say, if they do go where I think personally, with the likes of M&S and others and large entities, whether it's the CIO or the COO, it's got to be mandatory that you safeguard people's data, is it not? I thought that was mandatory around everybody. No, mind listed companies.
It's not mandatory that you safeguard it. There are only penalties if you lose it.
Losing £100 million, Henry, do you not think that's a big enough penalty?
Yeah.
And what would the cybersecurity have cost? It wouldn't have cost that much. Surely it would have been like.
And this is the thing. People do not understand the risk, and you see this so much in insurance. Insurance is one of those things where you can have somebody that's trained in insurance and they've got 30 years experience and they understand the contracts and the law and how it's priced and what the underwriters want. It's a complicated field, right? But they're in charge of your insurance and they do a good job. Then you've got some businesses that treat it like buying paper clips. Oh, I'll go on comparethemarket.com and I'll go and buy a cyber insurance policy. Do you have any idea how that works? No. Do you have any idea what it covers? No. Do you have any idea what will happen if a claim happens? No. Do you have any idea how long it's for? No. Do you have any idea what the difference between policy A and policy B is? No. This one was just cheaper. Why the hell have you bought this then? Oh, well, because we buy paper clips, and when you're buying paper clips, the most important thing is that you get the most cost-effective paper clips, right? So I thought it was the same.
No.
And it really is scary how often that sort of conversation happens.
It concerns me, mate, when a brand like that that has been building back up, having been through some real difficulties over the past decades or so of drift and neglect, got themselves in a really, really good place, 23, 24. And that happens, and you find out they've not got the right, I want to say safeguarding because that's my background, the right cybersecurity in place. And you know what? Some people will say, oh, the hackers can hack anything. AI is making it more easy now, but it's usually personal, individual neglect. You're at work, don't open that at work.
Yeah.
Don't open that on your work laptop.
Oh, geez.
I'm working from home.
I've got a scary story for you on that one. So I got a phone call from America a couple of months ago from someone in the IT department. And I'm like, this doesn't look good. What the hell is this? Oh, hi, is this Mr. Beazley? I said, yeah, it is. Yeah, did you download this file? I said, yes, I did. Did you open it? Yeah, well, actually, it wouldn't open. Why? Well, it's got a virus in it. It was a document from the government website.
Oh, my gosh.
Now, because we've got proper cybersecurity in place, it flags it immediately. So I'm sat there clicking on this thing going, why the hell won't it open? I'm trying to open it like it's a .gov.uk website. What? And he said, I can tell you're not doing anything like wrong. You've and I can see why you're trying to access it and all the rest of it. But I just wanted to check, first of all, who are you? Second of all, why do you want this? Third of all, do you know what it is? Fourth of all, did you know it's been flagged for this? Wow. And he said, so I asked another question. I said, so is this the UK government spreading viruses? And he went, actually, no, it's a bit more complicated than that. It's not necessarily the file. First of all, it's not necessarily the file. It could just be that our cybersecurity's picked up something that looks like a bit of a virus and therefore flagged it. There's no virus in it at all. Or you can get things that attach during the download. It's nothing to do with the government at all. It's to do with the traffic. And again, our cybersecurity will pick that up. So there's a lot of different things. It doesn't necessarily mean that you have actually tried to download a virus, but because of what's happened, I've got to call you and ask these questions and have this conversation. And I said, well, all right, look, I've deleted it, I've wiped it, I'll do a virus scan, etc., and all the rest of it. But that was me, I'm fairly, tech savvy, and I'm sat here clicking on this PDF, going, why wouldn't the bloody thing open?
You've got to be so careful. Going back to the spending review, Henry, I agree with you regarding the segments that could be helped, and it goes back to them putting money where the projects can be delivered relatively quickly. I think that's quite important. I noticed today, I pulled some notes up here, and there was one of the aspects of it, allegedly, because we don't know exactly where they're going to throw money at, is again about transport links and TfL enabling them to deliver shovel-ready projects. You hear that all the time. No such thing, is there? The overspend and the size and the scale and the time frame it's going to take to actually deliver that is ridiculous.
There's consultant-ready projects.
Very good, very good. So, adequate, affordable homes, Henry, adding to places where there's acute housing crisis and shortage. One of the places where you live, massive housing shortage. People are getting squeezed out of London. No one lives in central London per se, but pushed further and further out. So an acute shortage. And today we had, what was the company's called? I think was it Bellway that came out with the results today? Was it, Henry? Bellway. So Bellway came out with results today, and shares of the house builders were all up. It posted a positive trading update for the 4 months at the beginning of June, and it saw their shares go up 7%, Henry, to an 8-month high, whilst Persimmon went up 5.9%. Barrett Redrow went up 5.6%, and Taylor Wimpey rose 4.6%. And on the back of the Bellway results today, I actually bought a house builder for the first time in I don't know how long. And I think regarding the affordable housing side, if they do trigger that tomorrow and say, yeah, we're going to make the planning, that's what slows everything down, doesn't it? The planning, the land bank, the sale of, and the assets side of it easier in the planning section teams, which were, I know you'll speak with those people quite a lot regarding infrastructure. That could help all the builders, I think, the ones that are efficient anyway.
It could, but
come
I've got
the
a bit
next
of
3 months to 12 months. So that's why I
I've
bought a builder. But that was, I think, what happened today was back on Bellway coming out positively. I don't think they were expecting that level of positivity,
No.
but I think they could get another boost tomorrow if Rachel Reeves comes out and says, we're going to do this for the house builders and construction teams.
Yeah, I've got another horror story for you there, actually. So I was up in Retford at the weekend visiting my grandfather, my Italian grandfather. And one of my aunts and uncles actually live in Retford, not that far away, on a new build development. And when I say new build, I mean like you can almost still smell the paint. They're lovely houses. They're gorgeous in London. You'd be looking at a small fortune for a house like this. And there's an estate of them, right? They've not built one or two. Did you know those houses were built 7 years ago and the developer has still got a shed load of them and they can't sell them?
In Retford?
In Retford. They cannot sell them. They're empty.
Cannot sell them after 7 years?
They're beautiful homes. Don't get me wrong. And, you know, these aren't the windows aren't falling out. These aren't the ones with the roofs falling in.
Well, I'm just trying to think. You're talking about the coal mine sort of area.
It's not really. There wasn't necessarily that much coal mining, but there was a lot of agriculture around there.
Agriculture, sorry.
But
you've got large employees within 20 miles of that particular
development. I mean, you've got Doncaster not that far away. You're 40 minutes away from Nottingham, maybe an hour in bad traffic. You're not that far away from Leicester. It's not a thriving urban area. It's not, central London. But the houses are very affordable. They're beautiful family homes. They can't give them away.
You have to send me the postcode for that.
This was the thing I was saying to Verity last night, actually. It's all right telling the house builders you need to build more. But if you're Avon Homes or whoever, and you've just spent £10 million building this development, and half of it's not sold after 7 years, you're not going to go and borrow another 10 million quid to build another load of homes.
You won't get access to it because you're still owing the money that you pushed into that development.
And that's it.
Yeah,
that's it.
Send me the links to that development, mate. I know plenty of individuals that are landlords and property gurus that would love to have a little spin around that particular area and have a look and see what's going on. And asking questions why. And they've got deep pockets. So they'll buy 2 or 3 houses, mate.
Yeah,
you know what I mean.
they
would, and that's what they do. If it's the right area, the right price, and the yield's reasonable, and there's commuters to get to jobs, all you're going to need is the likes of X, Y, and Z, US Titan, say, or the likes of,
Blackstone or whoever.
Yeah, absolutely. Saying we're now going to put an HQ 15 miles down the road. All the prices just take off. Yeah. Send me the postcode for that one, Henry. So the other bit on the spending review, Henry, that you might have missed with you being at work today was the announcement they made today regarding the spending review. And that was the government announced a 14.2 billion investment to build Sizewell C nuclear plant as part of their spending review. Once operational, to provide clean, homegrown energy for around 6 million people. So we're talking possibly 10,000 jobs, talking hundreds and hundreds of apprenticeship jobs as well for young people to get into the skill sets of what they're needing to do going forward. And all around that particular area, energy efficient homes, mate, going forward. Just a case of how long will it take is my question. And going back to when Nick Clegg was in the coalition party, he blocked nuclear power, as a policy. We could have had that done already, mate. Could have had it in place already, potentially, and be utilising it and having cheaper energy. But Nick Clegg in his wisdom decided, no, we don't want to go there with that. And here we are, X amount of years later, doing it now. How much did it cost to build? 14 billion. How much did it cost back then? Possibly half as much.
Yeah.
So madness, mate, madness. But here we are. I'm just thinking about the additional jobs and the apprenticeships and young boys and girls being able to have the opportunities to young men and women to learn new skills, learn additional skills, and be employed whilst they're learning.
Yeah.
Fantastic opportunity around there.
Yeah.
But I suspect I've got a friend of mine who's a member of Greenpeace. I'm not going to tell you the name. They're spitting chips. I've got a phone call today going, what? Effing and jeffing. I'm going, oh dear. So you're not a fan of nuclear? No one in Greenpeace is going to be a fan of nuclear power, but here we are.
No.
Here we
No,
are.
and again, I've had this conversation with people, and you've got the statistics. It's the safest form of power. There's the fewest accidents. It's one of the cheapest forms of energy. You also have this lovely thing called radioactive nuclear waste that comes out the back end of the process that we can't do anything
You have to get rid of, yeah.
And it's like, if you spill it, you destroy people. If you dump it, you poison the environment. If you store it, it takes 10,000 years to degrade. And oh, by the way, if this thing goes wrong, then the entire country gets wiped out because there's a nuclear blast. It's like, it's got a few drawbacks here and there. So, I'm a bit torn on nuclear, if I'm honest.
I think we might be on the same page here, Henry. Is that if they decided to come to LE1, right, or LE3, or Rutland, let's use Rutland, right, where we've got the far wealthier individuals,
natural beauty.
Yes, exactly. And it's like, you know what, all that green and pleasant land there, we're going to build a nuclear plant. Yeah. I think Rutland would be up in arms, mate.
Yeah. Or even better, pick the whole of Rutland up and move it somewhere else. We're going to leave you with the waste.
Yes.
We're going to put a nuclear containment storage unit in the middle of Rutland water. But I shouldn't say this on air because someone might listen and think it's a good idea.
Yeah, we've got some fans in Rutland, mate. We've got some fans in Rutland, some business people I know that live there. I'll see them tomorrow night and I'll say, Henry says, yeah. We're going to move Sizewell C to Rutland. They'll come looking for you, mate.
Exactly.
Oh, dear. So, yeah, that's the news that they've already put out there for today. So that's a sizable win for Rachel Reeves regarding jobs, anyway. Time frame, I need to have a look. No, I didn't mean to. That wasn't a pun. It wasn't a pun. But yeah, significant 10,000 jobs plus, mate. So let's see what happens there. So yeah,
Lovely.
house builders got a bit of a boost from that. I think they could get another boost tomorrow from that particular spending review, Henry. And we'll see the markets. I suspect, unless the market goes, you've leaked it all already. There's nothing there we see that's of any boost to the markets. I think we could actually nudge and hit 8,900 on the FTSE tomorrow. It should be within reach, and then we could close at a new all-time high, which is just bring positivity towards the markets and individuals feeling that investing is worthwhile and it's not as bad as it felt in April. It's only 2 months ago, and people were literally on their knees this time 2 months ago.
This is an important point, actually. 2 months ago, you'd got people that were really rock bottom. Oh my gosh, Trump's in power. Oh my gosh, there's a tariff war going on. Oh my gosh, the war in Ukraine and the war in Gaza and it's a disaster. And Rachel Reeves is destroying the economy. Sell everything, go to cash. And we've talked about this idea of temperament a few times.
Yes, we have.
What we've just talked about, a government review. You're reacting to the news. You've not got a long-term plan necessarily. You're reacting to the news today. And the news today can change tomorrow. It will change tomorrow. Yeah. Investing isn't really something you should be doing if you are excitable or impatient, in my opinion. Announcements are one thing. The news is one thing, but the world is another. Things are unpredictable. You can think what's going to happen next week, but in 5 years' time, 50 years' time, the world will be very different. You've got to study first of all what companies and governments and institutions are saying. That's important. Look at what they're telling you, look at how they're telling it you, but also understand the methods of how money flows through the economy. Where's revenue going? Where's cash going? And is that being converted into profit? And then try to assess which firms you think are positioned to make the most of that. It's no good hearing Peter say, well, we've announced Sizewell C. It'll be Friday by the time this comes out. Right, I'll go and buy Rolls Royce. They'll do well. The price has already gone up 70%. might go up another 70% for all I know, but you've already, like, you're reacting to the news as it's already happened. What you really ought to be asking yourself is, if this announcement about Sizewell C remains constant and the government does go and spend the 14 billion, and we do have 10,000 new jobs, and we do need a transport infrastructure to transport and store the waste and clean it, and we do have all this power which goes into the grid, what companies are out there that are going to benefit from all of that? And how long are they going to benefit for? And what other industries might thrive as a result? If we get cheap power from a nuclear power station, does that mean we could run arc metal reactors for iron smelting? No one's talking about that right now, but there's a crisis with the steel industry. If we get cheap energy from a nuclear power plant, could we run steel furnaces off it? I don't know. You know, if we did run steel furnaces, would you then need to ship the steel abroad? So would we need investment in ports? Would you have a steel making industry? Would you get more steel frame buildings? So would that reduce the use of bricks in buildings? Or would that increase the demand for bricks, as people are now building more with steel frames, but then they need to hide the steel frames behind brick? That's the sort of thing that you ought to be asking yourself when you're hearing this news, not just a short term, oh, right, well, I've heard this, so I'll buy that. In my opinion,
Agreed.
you know,
spot on. Well said. You talk about the beneficiaries, Henry, and it's also, as you said there, it's about, rightfully, is thinking about who are the long-term gainers from this. You know, there's going to be a reaction to the news tomorrow, but who will be the long-term, not the for a week? Who will be the long-term beneficiaries, and who have got the actual money to actually execute a strategy which will enable them? The indebted companies can't go suddenly and go, oh, look, they've done a review, so therefore can borrow some more money. It's the one that are cashed up and ready to go and go, lovely jubbly, let's get on with this. You know what I mean? Let's seize the opportunity. And you know what? They're going to, you know, we'll talk about some takeovers later on, but there's going to be some of those vulnerable companies who can't capitalize on that particular spending review or what's going to happen in the next 6 months. Larger companies with deeper pockets and go, let's just bolt that one on. Let's take over that one and then move it forward and make it more efficient within our group. Yeah. So those opportunities are going to come. But you're absolutely spot on. Look for the beneficiaries. Look for the better companies that are out there and see what can be done. Yeah. So on that note, Henry, the last pod we were talking about was about how and when to sell stocks, shares, and investments. And keeping within that theme, there's a couple of stocks I want to talk about now who have, to use the word, bounced back from neglected sort of areas. And one of them came out with some news today. And you mentioned the SPAT regarding Musk and Trump, and the company with that I'm speaking about, you mentioned a couple of months back in the pod, Filtronic, yeah, FTC.
Oh yes, FTC, yep.
Yeah. So that was going great guns. Everything was hunky dory with it. Everyone was buying it. I think there's certain fund managers have bought it at 15 pence and neglected. It was back at £20 back in the zeros, 90s to 2000s, back at £20 a share. And it's gone and got spanked all the way down to 15 pence, some 10 pence even. Some fund managers got wind of what was going on and bought it, and it's gone all the way up to £1. It's dropped back down, had a wobble in April. Everything got sold off. It dropped off. Lots of people that had been buying it for it to go to £1.50 sold it all the way down to 82 pence. And then today came out, despite weekend noise regarding the Musk and Trump spat, and that SpaceX were going to decommission all these different things and rip all these contracts up and not going to push forward regarding all that sort of stuff. Which company have we got in the UK that's getting a lot of its revenue and contracts from SpaceX? Filtronic. Shares wobbled a little bit on Monday morning, climbed back a little bit. Today, it won its largest order to date from SpaceX of 32.5 billion. Sorry, correction, million. 32.5 million to be delivered in. Yeah, it's a bit too big for them. Couldn't handle it. In 2026, and the share price went up I think initially it's something like 144 or something like that, if not a bit more. And then it's closed down a little bit. But essentially, it's now up 70% since that 82 pence fall in April. So 2 months, the share price has gone from 82 pence up to 144, closed just below 140, I think, 138-ish today. But again, people were thrown out of the stock on Monday, and people bought it higher and taken it higher again today, 70%. One of the wealth managers, of which I own, got a bit of a boost today. JP Morgan lifted the stock to overweight and placed it on a positive catalyst watch, and said it valued its GEM, which is the interactive investor platform, which it's only bought in recent years. The CEO, Jason Windsor, new one, who went into Aberdeen. What's the first thing he did, Henry? Put the vowels back in the name.
Best decision he
and
could
he's now
have made.
Proper Aberdeen spelling. And now he's sorting out the business, and the shares are up 50-60% from their lows of early in the year, and currently paying a 7.9% dividend. I've held it for a good while now. But I'm giving those two examples as knowing going back to Peter Lynch, knowing what you own, knowing what the company's involved in and what the space it's in, what it's doing, and irrespective of the market, knowing when to sell and when to get out. And sometimes some of the best stocks that you own, I keep saying it on this program, in this podcast, some of the best stocks that you own, some of the best stocks out there are stocks that you already own. You don't need to go and buy the new shiny one that's moving ever so fast, and those that have held Filtronic from 30p, 40p, 50p, I've been rewarded with it now being at £1.40 nearly. And, they're going to have to try and diversify away from SpaceX, and they will do. And therefore the share price could carry on higher, I suspect. But if this SPAT is actually a proper SPAT, and I can't see Elon Musk giving up his love of space and the SpaceX program. I just can't see it happening. He loves that too much. That's why everything that not everything, quite a few things that he's in touch with has an X on it, because that's his thing. Yeah.
Whether you are an experienced or new investor, you know how valuable it is to conduct portfolio enhancing analysis and to have easy access to data that will give you the edge. As a Twin Peaks investing podcast listener, you can access an exceptional offer, the UK's #1 investment data and analysis software for private investors and traders. This special Twin Peaks offer is available to new subscribers only, and you can subscribe using the promo code TWINPETES. The incredible and exclusive offer means that monthly subscribers will get their second month free, and annual subscribers will get their 13th month free. Sign up and subscribe today using the Twin Peaks promo code, and you can save up to £69. Visit sharescope.co.uk for further details and subscribe to the investing and trading analysis and data you need.
He's passionate about space. He wants to run NASA. That's his ultimate goal, I think.
Don't go there. I don't want satellites falling out of the sky on my head.
That is his ultimate goal, mate. So he ain't going to give up on SpaceX. So Filtronic will be fine, I think. And someone will come in here and say, I remember back in June 2025, Pete, you said Filtronic would be fine. It's now back at 2 pence. I got it wrong.
Well, it's funny you say that, because that idea of not panicking when the market drops is an important one, because so many people in April were so convinced the sky was falling. And I was having a look at this out of curiosity, this things that have bounced back, right? Now, I don't own this. The company's Jet2 PLC, the airline, the ticker's JET2. They do leisure travel, basically.
Yeah.
Positive company. It's fairly cheaply priced. It's on a PE of 10. It's got forecast earnings per share growth of 14%, 20% return on capital employed. The shares dropped from the beginning of this year down to April the 7th, 9th, when we had that tariff panic. About 27%. They went from just over 15 down to about 12. They've since skyrocketed 65%, all the way back up to £19. And I just wonder
Wow.
how many people were getting nervous and selling at the beginning of this year and could have, if they'd waited, been sat there on 19 now. For a healthy business, positive cash flow, good return on capital employed, not crazily priced, not doing anything, not trying to find gold in a hole in the ground. Real functional business, and people panicked and sold it.
And it happens over and over and over again. And that's a great example. Year to date up 25%. In the past month alone, up 13%. Sitting at what is it? Is it 5-year highs? 5-year highs. Max. Sorry, sitting at all-time highs.
Yeah.
So yeah, it's done phenomenally well over the time it's been listed. A great company. I suspect my only concern would be, and we've had difficulty sorting some stuff out for the mini boss, is and I'll say the word that nobody wants to hear. Since Brexit, is more and more difficult to actually get forms filled online, things done online for traveling, and I suspect more so the US. And I don't think Jet2 do a lot to the US. It's mainly Europe, is it? Is that right?
Yeah, I think it is mostly
Yeah.
Europe.
So, but to get to Europe and back and do bits and pieces, there's more red tape and BS to fill out than I don't
Yeah.
know what.
Yeah.
So doing travel and doing things online and sorting your passport out and getting the right this, that, and the other inside leg measurement checks is ridiculous. And some people are going to go, sorry, I'm just going to go to Cornwall.
Yeah.
I'm just going to go to Dorset. Just going to go to Suffolk. Yeah. But there'll always be that large number of people that want to go overseas and get the guaranteed sunshine. And Jet2 have been delivering over the years. And the shares, as you said there now, Henry, have flown all the way up to all-time highs. So yeah, I'd be watching that share price. It's not something I would chase, given that it's at all-time highs.
No. I'm not
But
necessarily saying go out
historically,
and buy it. I'm
all
just
the research that has said is that when shares break out, which clearly this has done in the past year, it's gone from the lows here, Henry, of what sub 12,
yeah.
just lows of 12.
Yeah.
Yeah,
Yeah, it's gone
11.59.
from about 11.50. Yeah.
Yeah, 11.50 on the 7th to 19.
And
That is
if
some
you go
move in
back a
2
couple of
months.
years, at the end of 2022, it was down near £5.
Wow. Wow.
That's been more than a
Opportunity.
3-bagger. That's nearly been a 4-bagger from all time, well, from
Yeah,
5-year lows.
yeah. Absolutely. Sometimes you've got to have
So
to, squeeze your nose and just buy it sometimes if it's a really, really good business. But that's a good shout, that one. Done ever so well. But 11.50 to 19.50 essentially. That's a big old move, isn't it?
yeah.
It's a big old move since then. Yeah, congratulations to those that own Jet2. Yeah. Okay, Henry. 2 takeovers, mate, already this week, and we're only on Tuesday. Yeah, 2 of them. So congratulations to those that own Alphawave, which the US chip maker Qualcomm, well, US behemoth chip maker Qualcomm have agreed to acquire Alphawave for 2.4 billion as part of their efforts to strengthen its AI technology. And basically sent those shares up 25%. There was talk about this stock being purchased back in March. The shares at that time, and we talk about bounce back again, right? Guess what they were? 93 pence on the 31st of March. The takeout price for shareholders will be £1.83. What's the premium for that, Henry? A 96% premium to that March 31st price.
Yeah.
Just sitting there in front of us all. Did I buy that? No. Did I see it come in? No.
I've looked at it, and I
I
said
didn't
to a
even look
friend
at
of
it,
mine
mate.
the other
Didn't
day,
even
I
look at
was
it.
kicking myself when that takeover offer came in. And it's I'm always looking for reasons not to invest, if I'm honest. I'm not of the easily persuadable mood with investing, but with that one, I feel like if I'd just been a little bit more gung-ho with it, I could have had that nice premium.
Yeah. So sadly, Alphawave, which designs semiconductor tech for data centers, all about data centers now. The AI is needed. AI is growing. Sorry, AI is growing that fast that more and more data technology is needed, and this is what they do. And Qualcomm are no fools. They've gone, yeah, we bolt that on there. Let's get this company in here. They're willing to invest 2.4 billion for the pleasure of that. And another one gone, another one or gone or soon to be gone. Is going to be owned by a US behemoth. Bye bye, bye bye, bye bye. And then same day, Henry, another behemoth that we've got in our, sorry, UK behemoth, should I say, in our on our stock exchange is Spectris, ticker symbol SXS. Advent International proposes a £37.35 takeover plus the 28p interim dividend. They've got until this July the 7th to make a firm offer. And this values Spectris at 3.73 billion or $5.06 billion. So this is a private equity company looking to take them out of circulation. The share price, mate, on the 6th of June, right? 6th of June, Henry. Last Friday. The takeover comes out on the Monday. 85% premium, mate.
Yeah.
Sitting there in plain sight going, over here, no one loves me.
Yeah.
85% premium, mate.
Yeah.
No one wants a share price when it's going down, mate. 85% premium, just like that. Oh, my days. Oh, so it's not just AIM, mate. It's the FTSE as well.
Yeah.
Getting stocks of all kinds of sizes being
it will carry on. It will carry on.
I've said it for 2 years, mate. There's more takeovers coming, and they're coming. I didn't expect two of that sort of nature on the, you know, what did you say? Did it? Yeah, there is that adage, isn't it? Merger Monday. It literally was Merger Monday.
I've not heard that one before, but yeah.
Merger Monday, and then we're going to have Takeover Tuesday, and what can we have with W? We'll have every single day of the week there'll be a takeover in the UK stock market going forward, mate. So yeah, those two little takeovers to mention, mate. I've got a couple of stocks to mention later on. Right, where are you going to go? Oh, sorry, I'll tell you what I'll do, Henry. Very, very quickly, I will actually give some thanks and commentary regarding our wonderful supporters who have kindly donated to the Menphys charity fundraise, Henry. We've actually, mate, if I can find my notes, I've put them down somewhere. I cannot find my notes for it. We've actually, ladies and gents, due to your kindness and generosity, surpassed the 2,000 mark for our charity fundraise. So thank you all ever so much. We are currently sitting at £2,042 plus gift aid. We've had some wonderful individuals that have recently made donations since the last pod, and they are Sukbir Kapoor, and his note here is, hello, Pete. Let's rally for Menphys together. Great work and good wishes for all the efforts being made. Happy to be part of this. And Sukbir donated £100 plus £25 gift aid. So thank you ever so much, Sukbir. At Nathan R999, his words were, fantastic pod. The quality just seems to get better. Fantastic choice of charity, as completely understands support needed for SEND children, that special educational need, that's the abbreviation for SEND, and they're often forgotten about and their families and siblings. £50 and £12.50 gift aid from Nathan, so thank you ever so much, sir. And then Paul E made a donation as well. Thank you for your fantastic work in the investing community. I truly appreciate the knowledge and experience you share. Supporting this great cause is the least I can do. Best of luck. And a donation was made there by Paul E. Really, really appreciate that, Paul. Thank you ever so much. And as I was saying before, and Henry commented as well, we are looking to support a program that enables the SEND and disabled children to be supported into employment. There's a program we're going to be putting on hopefully at the end of this year that enables young men and women that are disabled, that have got specialist need, to be supported into employment so they have their own independence going forward and own their own salaries. And there is part of the not spending review, but cuts. There is talk about them going after disability benefits, and criteria is being raised for adults with disabilities. So they could be having their benefits impacted going forward if the government actually goes through what they're planning to do. So we need to ensure we get as many young people employed as possible that are able to work. Henry, there we go, mate. Well, not halfway there, but £2,000 donated by our fantastic listeners. What do you think of that?
I think that's absolutely fantastic, Peter. Thank you very much to Paul, Nathan, and Soupbeer. I think I've spoken with all three of you actually in the last couple of weeks, so it's lovely to hear from you, and thank you for supporting the cause. It makes a huge difference. It makes a huge difference to the charity. It makes a huge difference to the families. So keep up the good work, guys. We are getting there.
Absolutely.
And you sort of pinched my thunder on that one, actually, because I was going to mention the charity fundraise. But in which case, I'm going to return the favour and I'm going to mention the Investors Summit briefly before we go.
Okay, I will mention the Just Giving page before I finish that, Henry, please. So www.justgiving.com/page/Peter-Higgins, and that's for Menphys, nothing to do with me. I will not be getting that cash, and it will be going to a very, very good cause. So if you've got £2, £5, £10, whatever you can afford to donate, please do so. Let's get to 2.5k and the halfway point, hopefully before the end of the month, and then we've got the second half of the year to get to £5,000. And I'll tell you a little thing I've tried to do as well on another pod. So sorry, Henry, go on. Over to you, mate.
I was going to say just quickly before we wrap up, for those of you that haven't been tuning in recently, Peter and the team at Copia Digital have launched a very exciting event, which is happening on the 13th of August at the brewery on Chiswell Street in the City of London. It is the Investor Summit 2025, and I have to say I am exceedingly excited about this one, ladies and gents. Now, Peter's been, I wouldn't say shy, but a little bit shy, if I'm honest, about who we've got coming to this. There are an absolutely spectacular lineup of speakers. And I know Peter's itching. I can see him twitching in his chair, waiting to tell you about a few new ones that he's got. Now, I'd just like to, before Peter tells you about the latest guests, I'd just like to encourage you to go and visit the website. It's investorsummit.com, I want to say. Let me just double check that. .co.uk. I've got that wrong. Sorry, investorsummit.co.uk. There's 67 days left to get your ticket. There is an early bird discount available for those of you that get online and get your tickets booked. There is an entire day of speakers available. Some fantastic talks from some of the UK's leading investors. But much more excitingly, an opportunity to meet like-minded retail investors like yourselves that listen to the show, that are interested in investing. Come out, have a great day, learn about how other people are doing it, share the war stories, pick up some ideas, and just have a great day out. There is food available. There's a fantastic catered lunch available. There's breakfast available. There's a bar open in the evening, so you can stop and have a few drinks with us. And as an additional benefit, if you need anything else, any other reason to go and have a look at this and get your tickets booked, Peter and I will be there at the Investor Summit showcasing as the Twin Peaks investing team. We will be doing a live podcast. You can come and see us and cheer or throw tomatoes, depending on your preference. But we will be there doing a live episode of the podcast. You can see what it's like behind the scenes, come and meet us in person, and then ask us all those difficult questions that you've not had a chance to ask us, like, you know, Henry, why aren't you wearing a tie today? And Peter, why have you always got plants in your books, or even books in your plant pots? So do come along. Do go and have a look at investorsummit.co.uk. Do get your tickets booked. And Peter, I'm sure, is now going to tell you about the new guest speakers that he's got lined up for us. So Peter, take it away.
Thank you ever so much for that plug, Henry. Yeah, I am super excited. It's been a love affair, this, and I'm really trying to keep myself focused on getting the end goal, which is delivering an absolutely fantastic event for you, ladies and gents, and also the City of London specialist leaders, grandees, thought leaders, fund managers, you name it. I've got them all there, and the journos as well. We've got AJ Bell involved. I've managed to encourage and get the Investors Chronicle magazine involved with this event now, so that's a new name. I mentioned Simon French before of Panmure Liberum, Stephen New, Blue Whale Capital. To be a fireside chat done with Stephen as well as him doing his own presentation. And John Stepek of Bloomberg, Justin Urquhart Stewart out of retirement. I'm hoping he's going to wear his red braces. New person on board as well is Laura Foll, fund manager at Janus Henderson Investors. Mentioned before, the Association of Investment Companies involved. So you're going to have a fantastic panel session via Annabelle Brodie-Smith and possibly 3 to 4 investment companies on her panel session. You've got Polar Capital Holdings involved as well. And you're going to have at least 1, maybe 2 fund managers doing presentations there. One fund manager I've definitely got is Alistair Hunwin, and a fund manager at the Polar Cap. Will Fenner of the London Stock Exchange Group will be there. Moira O'Neill, the FT columnist and author, will be there. She's now freelancing. Lord Lee, I think you all know about Lord Lee, being the first ISA millionaire. Robert Crayford, CQS, Natural Resources, Growth and Income co-fund manager. You're going to have ShareScope there. And you're going to have Lindsay Cook, financial author and financial journalist as well, a new name that I've added. ShareSoc are going to be there. Ray Coyle, CEO of Energize Africa, is going to be there. Lisa Ashford, MBE, CEO of FX, will be there. And you've also going to have Micah Curry. There's another few names I've got, I'm not fully confirmed yet. Micah Curry, ex-head of content at Hargreaves Lansdown, and she's an author, editor, and investment commentator, will be there as well, involved in a panel session. And as I said before, Blue Whale Capital are the platinum sponsor of the whole event. I've got a few more names coming, but the early bird tickets should cost about, I think they should cost in total about £120, and they're currently £84. I had a conversation with the largest publisher of financial information just yesterday, and last week, a second meeting we had with them as we were trying to get them on board, and they told us that the tickets were too cheap because the events that they're looking at around London and elsewhere are ranging from £150 to one that they showed me at £750 per ticket, Henry, for a one-day event mate. with one track, not 3 tracks.
Well, I think it's also worth pointing out here, ladies and gents, for those of you that haven't dined in London recently, £84 for breakfast, for lunch, for a day of speakers, for the venue and the bar in the evening. Now, admittedly, the bar in the evening, there's drinks and canapes and whatnot. If you go out in London to pretty much any restaurant, you're looking at £30 a head per meal now, outside of very cheap chains, Wetherspoons, etc. And you're getting all of these speakers and the venue, and not to mention the Twin Peaks Investing podcast. I mean, we must be worth at least 50
You're
quid.
You're going to keep saying that. You're going to put people off, mate, about Twin Peaks.
I've got to rant myself. But putting your time, and it's more than just your money, it's your time. It's a Wednesday in August. Putting your time into this is more than just about supporting the Investor Summit as an event. I see this as an opportunity for us as an audience to actually get together. I had an absolutely wonderful time with so many of you when you came to see us at the Master Investor Show, and we can do the same thing here at the Investor Summit. It's a great opportunity to meet like-minded investors, talk investing, learn, meet each other in person. And there were so many people I met at the event at the Master Investor Show that said they were scared of coming. They felt like they got imposter syndrome. They turned up at the Master Investor Show and thought, what do I know? I'm just Joe Bloggs that runs some money. I don't know. I don't deserve to be here. And they had a fantastic day. And they realized, actually, they do deserve to be there. You all deserve to be there. You're all lovely people. You all write in, you support the show. And it's about building that community together and coming along to the Investor Summit, doing your part for that. I think is worth it. It's priceless, you know, and you'll help yourself, but you'll also help so many other people out there that are nervous about investing and will get the opportunity to meet you at this, because it's not really about me and Peter. You know, you can hear us every 2 weeks. We're just window dressing, if you like, but meeting the other members of the audience, that's quite powerful.
The network effect, absolutely. And networking and having the opportunity to speak to some of these individuals, you know, being able to look Stephen you in the eye, or someone from Polar Cap, or, you know, Laura Fall from Janice Henderson, and actually asking her direct questions about what does she think about the markets, you know, speaking with Annabelle directly and asking Annabelle Brodie-Smith, what does she think about the markets? I think that's the beauty of it, and being able to have that one-to-one, you know, with them in a safe space where, you know, they're open to, if it's out there in the world, I can answer the question. If it's not something of public knowledge, obviously I can't say anything about it right now, but they will answer the questions. I think that's priceless. And this is the thought leadership piece that I was trying to put together to ensure that we had some of the best brains and ladies and gents of the city in the same space. This isn't a small cap conference. This is an educational piece so that everyone becomes a better investor. Everyone knows more about what to do about inheritance tax, more about what to do with pensions, more to do about their investment trust that they own, the stocks that they own, the funds that they own, and maybe even more so about, you know, how to plan better and look at the markets. We keep talking about the psychology of the markets. The biggest thing that investors have that are a detriment to their own investing is they investor themselves. Yeah, they investor themselves. And if you can get better at being a better investor, you know, whether you're compounding at 7% now, if you get better at being an investor and compound at 8% over the space of 30 years, that's going to make a significant chunk of change to your portfolio. So yeah, so we'll look forward to seeing you there. Visit the site at www.investorsummit.co.uk and have a look and purchase your tickets as quickly as you can. Have we got time for one quick stock, Henry?
If you're quick, go on then.
I'm going to be very quick because this is one that I noted and it's gone past where I would buy it. But I think people should keep an eye on this one, Henry. And there's another stock I was going to talk about, which I won't do now. And it had some news out. But on the 27th of May, Elementis, ticker symbol ELM, you can look it up on ShareScope if you've got the thing on screen there. They sold their talc business, but they've been trying to get rid of it forever because of some litigation around it as well. And they said they were going to do a share buyback. There's big talk about this particular sale because they simultaneously signed and completed the sale of the talc business for an enterprise value of 121 million. The net proceeds from this transaction was as a measly 55 million. So where did all that cost go? You know, the costs were more than they actually got for the business, if that makes sense. Yeah. 121 ended up with 55, sorry. Anyway. So April lows, another bounce back stock, Henry. £1, 9.5 pence. Today, £1.56. Got rid of the skeleton in the cupboard there, the talc business. They're a slimmed down company now. They've sold that and potentially all the litigation that if anything ever comes from the issues with the talc business to IMI Fabi for 55 million. They're a cleaned up company now. They've got themselves, is this the right one? Yeah, they've got themselves a new CEO as well. That started on April the 29th. What am I saying about this company? I think now it's cleaned up, now the share price are rising. It's always, or it's been for a long time, a potential takeover target. I think, have a look at this, folks. And if the market has another little blip or falls down betwixt, say 120, 130, I would buy this particular company. Not just for a takeover, but for future growth. They're clean, more efficient. not anchored regarding the talc business. Just have a look at Elementis. That's what I'm saying. Have a little look. Henry's smirking. It means that he doesn't like it. Come on, what are you going to say about it?
What
you just want to get home to get your tea?
No, I'm not going to go into the ins and outs, but I've just pulled it up on ShareScope. PEG of 3.9, forecast turnover growth of -6%.
Okay.
Pays a bit of a dividend, 2%. Negative return on capital employed. Don't like the look of that at all.
Don't like the look of it. Okay. Right. The date, ladies and gents, the 10th of June, 2025. I'm going to put a wager and I'll buy Henry another large bottle of whiskey, as I do on occasions to treat him because he's a good guy. I'm going to wager you another bottle of whiskey, Henry, that at some point between now and the 10th of June, 2026, that is no longer an independent company. Do you want to take that wager, mate? I'll have a litre of rum. Do you want to take that wager?
You're on.
Right. Virtual handshake there, folks. We're now shaking across the screen. Okay. I don't own the company, so I'm not ramping it to say, go and buy it tomorrow because I want to get a premium on it. I don't own it. Right. Henry, that's a wrap, sir. Are you happy with that?
I am happy with that, pal.
We've covered a lot. Well, me and you'll have a chat tomorrow when we see the Rachel Reeves review. That sounds odd, doesn't it?
Yeah.
That's what the Rachel Reeves review. Yeah, all the R's. And we'll have a chat tomorrow evening, and we'll both be looking at the market. And if the market hasn't cracked 8,900 and push it on for 9,000, then I'll be like, what did she say again? Why has the market gone? Again, we want some positivity. We want the markets to go higher. We want the pensions deficits that some people have got to be, pushed towards a surplus or doing well. So let's just see. Hopefully she comes out with some good news and the market goes, finally, give her a little applause. Yeah, Rachel needs some applause, people. She needs some love. And the markets need more so because we're losing too many stocks by predators and private equity companies. We want some IPOs. If the markets, if the economy is doing well, IPOs will come to the UK, and not the US. So we want some more IPOs. We want some companies saying, no, I don't want to be bought at a 15, 20, 30, 90% premium. I want to stay independent because I believe in this company, rather than we're recommending that. Off we go. Okie dokie. Ladies and gents, that is a wrap. It is now 8:15. I didn't add my Scoobies yet. I suspect Henry's had his tea. I haven't had mine yet, or dinner, depending on where you are in the world. Ladies and gents, thank you ever so much for joining us again. This will be going out on Thursday night or Friday morning, as per usual. Thank you ever so much for your support. Thank you all of those that have given us feedback on X, Blue Sky, and YouTube and elsewhere. Please keep giving us your feedback. Please subscribe to YouTube and all the other channels that you're on, and let us know your thoughts on this pod, what your thoughts about our conversations about all these stocks that we mentioned today. And just thank you ever so much, and we look forward to seeing you guys and ladies in 2 weeks' time, which will be around the 24th, 25th of June. Yeah. Okie dokie. Henry, thank you ever so much, sir. Ladies and gents, take care, and God bless you all. Bye-bye for now.
Twin Peaks Investing Podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage